Do this. All right, you have a full picture of the slide?
Yes.
Okay, awesome. Well, I'll get started. I really appreciate you having me today. My name is Jeannie Lumpkin. I'm the National Renovation Manager for Prosperity Home Mortgage. I have been with the company for about 22 years. And now I run the renovation company. So been through a lot of changes. The most recent, years back when Berkshire Hathaway bought Prosperity Mortgage. So we are going to talk about renovation. At any time, if you would like to reach out to me directly, or if you would like to send me an email, here's all my contact information. And we'll go ahead and get started. I am on Eastern Time. I'm located in Sarasota, Florida, just so you all know. Okay, so what we're going to talk about today is exactly this. So this picture was taken years back. This property was actually an abandoned property in Baltimore, Maryland. And it was abandoned, and somebody went ahead and we got it on the market, and our customer came in, purchased this with a 203K loan. We rolled the renovations into the loan, and the picture on the right is the finished product. So this is what we're going to talk about today. We're going to talk about what is a renovation loan, how they work, how they're beneficial for buyer's agents, how they're beneficial for listing agents, and then I'm going to go over some marketing tools. Now, Natalie has a lot of renovation marketing tools in her gold mine, or her total expert as you know it. So if you need any of those co-marketed, you can definitely reach out to her and she can co-market renovation with you. All right, so a renovation loan is a loan that allows a borrower to purchase and rehab a property all in one transaction or one loan. And the way that we do this is we look at the after improved value of the property. So these are 30-year fixed rates. The way we can lend more money on the way the home and its as is condition, or the way that the home is worth, is we base the loan on after improved value. Are y'all still with me?
Yes, we're still here. I just muted us.
Got it. Okay. I want to make sure. Okay. So these are 30-year fixed loans. They are not they're not temporary construction loans or interest-only loans during construction. These loans do include a fully amortized payment during construction. So how we get that after improved value is we send the appraiser out with a copy of our sales contract. So the appraiser knows that we're doing a renovation loan. That appraiser is also going to have a copy of the scope of work, or the contractor's scope of work. And the appraiser will determine the after improved value. So they will base the value on a future value based on the repairs that are included in the contractor scope of work. We do have refinance renovation loans available as well. If you have anybody that wants to update their home and doesn't have enough equity in their home to pull out an equity line. And then we also have investors and second homes available. Okay, so the loan programs that we do offer the 203K. That loan has been around since about 1984. That's going to be for your bigger projects. We also have an FHA loan that's for a streamlined project. A streamlined project meaning 1 to 4 unit properties that need a maximum of $75,000 in renovation. And we also have a conventional renovation loan, also known as a home style renovation loan. That's when we come into owner occupants if they want to put 3 to 5% down. We come into second homes, and we come in single family investment properties. So renovation in 5 simple steps. What we want to do is we want to identify a property that needs renovation. We will then select a contractor. Contractors are selected by your buyer. The contractor will need to be licensed and insured. I will go ahead and take care of that process with Natalie. We will make sure they're licensed, insured, they have homeowner references, they have at least 3 years of contracting experience, and we will validate them is what it's known as, contractor validation. Then we will get a quote from the contractor. The quote needs to be broken out into labor and material costs. And then what we do is we order the appraisal. So what I said previously is we give that contractor quote to an appraiser. The appraiser goes out to the property and determines, based on the work or the improvements that we're doing, the after improved value of the property. We then close, and the title is transferred to our buyer. And after closing is when the work starts. Okay, so here are just some of the eligible repairs that I've done over the years in renovation loans. A lot of them are cosmetic, but let's just say that you have an FHA borrower. FHA property conditions, I'll just to name one. On an FHA loan, you have to have at least 2 years of life left on the roof. So if we run into to that condition, not meeting that condition, perhaps in a home inspection, we could flip that over to a 203K loan. We can also do some very larger projects. So if you have a builder or an investor that's run out of money, but the property has been 90% renovated, we can also do those larger projects. But there's really not much we can't do with a renovation loan. Even with a conventional renovation loan, we can do such luxury items as popping in a swimming pool. Okay, so I just want to give you an example. This is a failed roof inspection. So this was actually taken a while after we had a hurricane in Southwest Florida. And the buyer went ahead, I'm sorry, the seller went ahead and listed the home. We did not have any pre-inspection for the home. So when my customers got under contract to purchase the home and we had an inspection of the property and the inspector got up on the roof, we realized that we needed a full roof replacement. So we asked the sellers to put the roof on prior to closing. They did not have the funds. They did really not want to make any improvements to the home. They wanted to sell it as is. So the customer went ahead and financed in a new roof, a new tile roof. You can see the cost of that. So the purchase price of the property was $650. We did get a licensed insured contractor to come in with a quote for $75,000. We wanted to make sure our after improved value would be there based on a purchase price of $650 plus $75,000. So that's a very important feature of these loans. Things such as roofs, plumbing, HVAC, and in appraiser's world, those are considered deferred maintenance items. So when you have a buyer looking to purchase a home that have those items, we would presume that those items should have already been maintained, all the major items. So we might have to come off that purchase price or renegotiate that down based on what our after improved comparables are showing us at this time. Our after improved value would need to be at least $732,500. Again, we got the contractor quote. We got the after improved value. We did start the repairs after closing. Now, a lot of you might ask, how would we get an insurance placement on a roof in this condition? And what we do is the same thing as builders do. When they're building new homes, we put a builder risk policy in place, which is a short-term 3, 6, or 12-month policy paid at closing. And that policy will go into effect as a 100% replacement policy once the roof has been completed and inspected. Now, do remember with these renovation loans, they're a little bit higher in rate. And there's probably going to be at least a discount point on these. So it's always a good idea to negotiate any seller concession when possible. And I know that varies in different markets, but Florida is a market that, just because I'm here locally, I work all over the nation, but I watch this market every day. We have a lot of inventory in the market right now. So oftentimes seller concession would not be an issue. So that's kind of how I gauge that. And you can see what's going on in your immediate market. And something easy as peeling paint. If you have peeling paint and you're doing an FHA loan, and the house is of a certain age, we would have to address that. So this is just a very simple before and after. Now I don't know if you have, and you might want to answer, and I can skip these. Have you started seeing any foreclosures, specifically HUD foreclosures in your area?
There's not many out here.
I wrote an offer on one last time.
Oh, of course, you went through it. Like, yeah, we had one.
We had one. Okay. Well,
Yeah.
let me tell, I won't take too much time on this slide. If you have any, I've done a lot of HUD properties, particularly in 2008. I closed 70 rehab loans that year, just on HUD properties. So if you have any questions or how to navigate anything to do with the HUD foreclosure, feel free to reach out to me directly. Okay.
Thank you.
Absolutely. All right. So a lot of the question I get from our agents is how to write the contract. So let's go back to that example with the $650,000 home that needed the roof. We are going to write that contract for $650,000. The only difference is going to be my pre-approval letter is going to have the additional cost of the roof financed into the loan, but the contract price remains at the as-is condition price. These contracts will have to state either contingent on 203K financing or contingent on home style financing. We do need at least 45 days to typically close from contract ratification to settlement. If you're looking at some larger ones, which Natalie and I, have been discussing, then we might need up to 60. So it's going to be specifically on how quickly we can get that renovation quote from a licensed insured contractor. Another caveat of these is we do not order as is appraisals. So it's very important when you're writing a renovation contract that you have in the contract or an addendum that the home is going to be contingent on renovation financing specifically. So if we do that after improved value, we know that we have to renegotiate on after improved value, not as is value. Okay. The seller assist is going to adhere to regular Fannie Mae or FHA guidelines. Maximum concession for a 203K is 6%. And on conventional, it's 3%, and it steps up depending on how much the customer is making in down payment. All right, obtaining the contractor quote. Remember that the contractor has to be licensed and insured. The contractor has to provide 3 homeowner references that they've worked with in the past year. The contractor also has to have 3 years of contracting experience. The bid needs to be broken out into all labor and material costs in separate line items. We do not allow the borrower to supply any material or to do any of their own work. If you want to use a family member for a contractor, we would not be able to do an FHA loan on that or a 203K. We would be able to perhaps get around that. It's called a non-arm's length transaction on FHA. Sometimes we can get around that on a conventional renovation loan. Now, once we receive the contractor bid, I'm going to order the appraisal. We're typically going to need 2 to 3 weeks after the appraisal has been delivered to go ahead and get final loan approval for these types of loans. Very important. When you do a regular loan, I know that we go through inspections and then you order the appraisal right away. So just keep in mind with a renovation loan, I am unable to order the appraisal until I have a fully broken out contractor scope of work. As a reminder, there may be some things within our scope of work or not in our scope of work, right, that we have missed that we need to add to the scope of work to bring the property up to FHA property conditions. So oftentimes the appraiser will still write us up for a few things, and then we'll have to go back to the contractor to get those additional items added. Okay, closing the transaction. Seller will get the proceeds just like any other transaction. The renovation funds will be held in escrow. We do typically disperse 50% of material costs at closing. And remember, all renovations will start after our customer owns the home and settlement has happened. Okay, so here's a before and after. This is one that we did, I believe in Pennsylvania. They did have, these folks had a kitchen fire, and these folks did not have a mortgage on their property. Therefore, they had no insurance. So what we did is we not only renovated the kitchen, we went in with a small renovation loan, put a loan in place, and did several types of renovations on their property. Okay, so here are just some current challenges, and if you have any that you're having, we can certainly discuss those. I know different markets have different challenges. So perhaps you've got multiple offers for a nice home in nice neighborhoods, which we always have that, right? We want to remember that updated listings bring top dollar. So we want to see if we can get our buyers some of that instant equity. There are more property options when it comes to offering renovation loans. It's a good way to compete with cash offers or investors. Fixer-upper homes usually have less competition if you're not in a market where a lot of cash is flowing from investors. And it also allows buyers to customize their homes. Where buying something just in its as-is condition, perhaps you have a different idea for a certain kind of kitchen or bathrooms or do an addition to give you some extra square footage. So here's an example that I did actually in Baltimore, Maryland. But what I did is I went ahead and I did a search in Baltimore. This is actually kind of old because Baltimore's gone up a lot, as is every market. But there are currently 40 active single family listings between 4 and 450 in Baltimore, but this customer wanted to open inventory and wanted to see if they lowered their price point, if they could come in and look at homes in the 3 to 350 range and possibly do 50 or 100,000 in renovation to those homes. And by doing that, we added 63 homes to the inventory. So that's just a little creative way if you want to play with your price points and try to open up your inventory by showing the option of renovation. Okay, so with these types of homes, you want to keep an open mind. A lot of these homes have not been lived in for a while. We could add a bedroom. A lot of folks put in a new kitchen. That's very popular for this type of loan. Of course, fixer-uppers I've been seeing, again, foreclosures and short sales. If you have a failed home inspection, or if you cannot activate utilities. So say that the home has a serious plumbing issue, or it has serious electrical issues and you cannot inspect the utilities and they can't be turned on before closing, we can use a renovation loan to get that loan remedied and closed. Okay. Listing agents. I also have a lot of marketing for listing agents. So if you have an as-is property that you want to list at what you believe its as-is current market value is, we can help you market that property by introducing our renovation loan products. Okay. 3 important instances here. What is the sales price based on the condition of the property? What is the estimated value, or I'm sorry, the estimated amount of the repairs that need to be completed to the property? What is the after improved value of the property? We want to meet or exceed after improved value. Very simple answer here. We had an estimated list price on this home of $319,000. We knew the home was going to cost $140,000 to renovate, and we knew our home was going to be worth $460,000 post renovations. So this was actually a perfect one because the customer didn't walk in with equity, but this is definitely in a neighborhood where they certainly have plenty of equity. This is a property in Philadelphia. Okay. Tools for agents. I think we talked about this. We can do special financing flyers. We have lots of marketing materials we can help you with, talking about the process or the different renovation loan options. These are just 2 of the examples. Multiple choice. If you have some property that might need a little TLC and you want to just kind of put a bug in their ear, multiple choice, we can do a renovation loan and add in all of these things. And then talking about the renovation financing process and just having a 101 knowledge of what that looks like. Okay, so we're here to help you solve problems. We're here to help you sell more homes in 2025. That's all of my presentation today. I would be happy to take questions or conversation starters or whatever you'd like to do at this point.
I have a question. So the example you gave from the Baltimore home, when the original value, I believe, was in the 300s and it was 140 something. And I think the future value would have been at 460. So is that, if, in that case, is that what the listing price would be from the seller's perspective?
Yeah, so is this the slide you were speaking of?
Yes, yes. So
Yes. Yes, so
if the after renovation value is 460, do the seller get the house fixed first and get the loan? And
no,
put the
we
price?
go ahead and we get the contractor quote. We get under contract. We get the contractor quote for the repairs we need.
Right.
We order an appraisal. The appraiser comes up with after improved value and the work starts after we own the home.
So the sale price on this one is 319,000.
Okay.
Yeah. So if you're marketing it as a listing agent, you could even get quotes. I mean, you're trying to sell, if you're selling in that neighborhood and that neighborhood yields 460, 500,000, right? Then you're selling that home based on use Nat as my lender because she has this loan and here's what
For the
for
repairs,
the repairs, yeah,
and the value will be this in the future.
right.
So then
Got it.
with that,
Great.
does the buyer get to kind of customize
Yes,
them?
yes,
So
absolutely.
it's not gonna be the seller that is customizing.
They have
It
nothing to
happens
do with
after
it.
the close. Okay.
Can you open me up to the room so I can see people? Is that possible?
If you stop, let me see.
Maybe if you share the screen.
Yeah, can you explain that again? Can you-
Yes, so
Can you see us?
from which perspective?
No.
This here.
But I stopped sharing.
So your house is trash, we gotta sell it for 320.
Mhm.
But the way we're gonna market this is to someone that
There we go.
buy it in its current condition. We need someone to use a renovation loan to buy it. We're gonna get some quotes, you have just contractor quotes, it doesn't have to be what they would use, right? The repairs need to be done, new roof, water heater, electricity, whatever, say it's 50,000. So when a buyer comes in, you're saying, we have this loan program, and if you do these repairs, and you go with this loan, you don't have to use your own cash, you can finance it. Because maybe it's an extra $130 a month in their payment, right?
Right.
Or $200 a month, and they're not using their own cash to buy a fixer-upper.
Right.
And then Jeannie and her husband are helping with all of the steps of, disbursements and getting to the finish line with our client. It's a very handheld process.
Are the payments to the contractors made directly to them or through the buyer? Like, does the money
Released from escrow.
release from escrow straight to the contractor, right?
No, we would never pay the contractor directly.
Okay.
All of our disbursements are made via a two-party check payable to our borrower and the contractor. And my husband and I did $100,000 renovation to our home. So we've been through the process and it is, so let's say your contractor is ready for a $30,000 draw. That's a big thing, right? And the last thing that happens is they're putting in the granite and the granite cracks. That this actually happened to us. So we could hold that check or only give him a portion of that check. but your customer has control because it is a two-party issue check.
Okay.
Okay?
Yes, now-
We would never pay the contractor directly.
Okay,
Good question.
that's good.
So from
No?
selling perspective, we're selling this program to their buyer.
Mhm.
That this house could be worth this.
Yeah.
And you don't have to spend your money, just get financed.
So they get one loan. Yeah, one big loan. One big loan.
Yes, it's one loan. And then what they would do is they would at least have to make 6 monthly payments and finish the renovations. But very important, they have to make 6 monthly payments. After they make 6 monthly payments, they can come back to NAP for a refinance.
Because the rate's higher, so that you'd want to refinance probably after
How much
6
higher
months.
generally is that rate?
Depends.
You would want, okay, I had this conversation, just to be realistic, right? Because I just had this conversation with a first-time home buyer this morning. The rate today is 7.625. From what I'm seeing on conventional non-renovation, it's 7%. So they could potentially, and we're talking about a first-time home buyer, right? So they could potentially come back and refinance. But my advice to the first-time home buyer is I want you to be comfortable with the payment at 7.625. Because at some point, what if rates aren't any lower? What if rates are 7.5 in 6 months? It's really not going to be a benefit to the borrower to refinance. Right. So, but keep that in mind. Now, my husband and I did have the opportunity to refinance. So it worked out perfectly. But yes, in a perfect world, I would expect them to come back and do a refinance loan.
If they go FHA, they get a free streamline refinance. And the chances on getting that rate much lower is there. So depending on which option they go. But for 0.5%, a lot of times if you do those numbers, if they're spending their own money or if they have it invested at 5%, you have to weigh all those different costs. Doesn't make sense to have, 0.25% to 0.5% higher rate.
So
Absolutely. And one more thing, pardon me, one moment, I'm sorry. Nat, I just wanted to add, we do the redefine your rate.
Mhm.
So if they do the renovation loan with me and then they come back to you and refinance, they will not be subject to the origination fee.
Okay. So last question, seller is only going to receive proceeds on the original list price.
Yes.
Yes,
Okay, so
the as
they
is
can't be like,
price.
oh, they won't even know the
Yeah.
back end, right?
Right.
Got it.
That's right.
So the appraisal takes a bit longer before it happens
Based on your contract.
because it's based on getting how fast you can get those contractor quotes.
Mhm. And on those properties, when you think about it, if something's been sitting for a while, I mean, if something's going to have 10 multiple offers or 25, right? It's not going to happen anyway. But if you have a borrower that's going into properties and they're complaining the kitchen's too outdated, but they love everything about that house, right there it is, right? For maybe 15 grand, 20 grand, they get to pick their kitchen. It costs them an extra $60 in their payment, depending on what's going on.
So if I have a buyer, they want to upgrade their kitchen,
Mhm.
then we do the renovation, and they move in if it's livable while they do the renovation loan process.
Good question.
It's a great question. So if the house is, and I tell you, I lived through a kitchen renovation, not the best, but doable, right? I remember rolling pies out on cardboard countertops one Thanksgiving. That's my fondest memory of it. But so if the house is livable, they can move in whenever they want. Okay. But let's talk about when the house is not livable. So let's say that they're going to tear the roof off and the house will not be livable for 2 months. There is a possibility if the house appraises for enough money where we can build in those 2 payments, they may be able to roll in up to 6 mortgage payments into the mortgage, but only if the house is inhabitable.
Okay.
Okay?
Really hard to sell, like, here, do this loan, but you can't move in, but you still have to pay. So knowing, it might be easier just to do a little fixer upper, but keep in mind that there's options.
Right, and if that.
Yeah.
Yeah, and if the value's there, then they're still paying in essence because it's getting rolled into their loan.
Right.
But there is that weird point for some of these renovations where someone has to move out and go rent and they're still paying their mortgage.
Right.
So that's a usual situation. Yeah.
When will the seller receive their proceeds? We've had sellers.
At closing, just like a regular loan.
The next day
Right,
after closing, like
right.
usual.
Okay.
Yeah, the seller's done.
Oh,
Yep.
they are.
Yeah. And
Title
then-
is transferred. The seller proceeds go to the seller. We wire the money for the purchase money. The renovation funds go into an escrow account, an interest-bearing escrow account. Okay. We disperse a 2-party check at closing for 50% of material costs, and then the next draw is available 30 days after closing.
And so the next draw is whatever you say it to be, like what the buyer says, okay, now I need a check for this plumber or the HVAC person. And so is that how it works, or do you just decide a percentage at the next 30-day draw?
They can do the draw disbursements in any increment that they would like.
Okay.
The maximum amount of draws that they can do is 5 throughout the project.
Jeannie, is the work completed when they do the draw, or is it, are they pre-funding some sort of work? I know they get
Well,
the 50%. They get the 50%, and then those other additional draws, are they upon what the buyer believes is completed, or?
We'll send an inspector out. So the inspector will determine, so when they meet with the contractor and the home buyer, they'll ask them what they want them to inspect. Whether it be the partial kitchen, the roof has been put on. It could be partial work, a stage of work, if you will. Or it could be a completed line item.
What if they changed contractors in the middle of it?
They have to let our investor know right away, which is Planet Home Lending. They have to send a certified letter to us, Planet Home Lending, and the contractor, stating that they're terminating them, and then they have to choose another contractor to go through the validation process. I will tell you, in many years of doing this, I've probably seen that half a dozen times.
But it is possible, yeah.
So is there a risk for the seller, if the seller's gonna take an offer that has this program in play, but then the contractor comes back and says, it's $200,000 worth of work needed to make this livable, but you only thought it was gonna be $100,000, now the buyer doesn't qualify, so it would fall out of escrow then?
We probably want to have the contractor quote come in during our inspection contingency.
So it's putting the seller at risk because they're taking it off the market for a little bit of time, right?
Yeah, that is true.
And then if the client, let's say they get into it, they finance so much, but they decide they want to add 30,000 to the pool, they can add their own cash for the difference of that pool. So I'm posing that as a question. So
Are you, Nat, are you saying an upgrade to the pool?
yeah, let's say that they're approved for 100,000 for a pool, but they've decided they want to spend 150. They're going to spend 50 of their own money and finance the 100.
Yeah, well, that's an interesting question. So if I want to do a pool, and pools are about 100,000, right? Basic pool. So if I want to buy a house for $500,000 and add $100,000 pool, and then I order my appraisal, and the appraiser says, based on putting a pool in this property, it's now going to be worth 650. And then I get the pool installed, and then I decide I want to add a spa or a cage, whatever the case may be. I'd have to use my own money for the upgrade.
It would just be direct to the contractor, I
Yeah.
suppose. Yeah.
And I would want to make sure that my upgrade was not going to significantly delay the installation of my finished pool.
That makes sense.
What we normally run into is people don't have enough money. And I'll go over that a little bit. So if you have $100,000 in renovation and the home you're purchasing does not have electricity that can be tested prior to closing, then we will always add, with or without electricity, we'll add a 10% contingency. If we can't turn water or electricity on, it immediately becomes a 15% contingency. So if my base renovation is 100,000, I have $15,000 worth of cushion built into my loan. So if during the renovation they find a crack in the foundation that was overlooked, we have additional funds to improve any unforeseen repairs. Any money that's left in that contingency after the project is done will go back to the buyer by doing a principal reduction. They will not get the money back, but it will reduce the amount that they owe over a 30-year term.
So they can't go get new furniture.
No furniture, but I have had people ask that.
Can I put the furniture in the?
Specifically custom curtains, I remember.
That's good.
Okay.
Any other questions, guys? All
So,
good questions.
I have a question. Obviously, the renovation loan is based on the value, on the after repair value of the property. Now, to qualify for that, what percentage will make it worthwhile for a seller to qualify for renovation loan? In other words, what will be the percentage of equity that you would normally consider it as worthwhile for you to advance the loan? Am I making myself?
Is that
More like the,
more like the
I-
refi?
Or
like a
like
cash out
how much you
refinance?
can borrow in terms of the equity you have in the property when you establish the after repair.
Are you talking about refinancing on a current home?
No, I'm talking about the renovation loan.
But-
Okay, let's use some examples. Let's just say the property, after the repair value of the property is about 150. And the value of the property itself, for the current market value of the property, is probably 60. In other words, if you're looking for a renovation loan, how much would you consider to be eligible in terms of what's the after repair value of the property against the current market price?
Well, you would just want to make sure that your total purchase price plus total finance renovation meets or exceeds your after improved value. You're not always going to come out of it with instant equity. Oftentimes you will, but that's
Right.
just going to be down to negotiating a decent price with the seller. You know as well as I do, some sellers will take a lower offer. It's just going to depend on the transaction.
So basically, it sounds like you're getting 100% finance loan after the renovations are done. There's no equity, potentially there's no equity once you're done. Is that right?
Not if your purchase price plus your finance renovation equal each other, right?
Yes.
If your purchase price plus your finance renovation is 300 and the after improved value of the house is 350, then you just have 50,000 in equity. I just did one in Pennsylvania where the couple has like 82,000 in equity. But you know, if you catch that market shift just right, that's very possible.
It's gonna depend on your comps.
Right.
Yeah.
But at least you're bringing that ugly house up to market value.
Right.
Absolutely.
And then you're able to get, depending on the market, you're able to get equity faster. Because you're bringing it up to the market value.
Absolutely. No, that's a great point. And just think, if you wanted to, some people have to do a renovation loan, right? I showed you that example with the roof. So if I come in and I don't have cash to buy the whole kit and caboodle, right? And I want that house. And I say to the seller, my lender is not going to approve a loan with that roof the way it is. Are you willing to repair it? And they say, we don't have the money to repair it. And you say, but I want that house, so I'm going to have to roll it into the loan. They will know that they're not going to sell that house until they accept a cash offer or they take a renovation loan. So that's up to the seller. Are they willing to? Well, I have properties all over that people are like, and I'm sure you see them, cash only. We do not want to deal with a renovation loan. We want cash only. Because we're selling it as is, where is. We don't want to have to mess with a lender. Show me what you'll offer in cash.
Is there any issue refinancing it then later if there's no equity?
Well, Nat can explain how the streamline FHA works. I don't do non-renovation loan.
It just depends on how much they put down, because they're always gonna have, you know, their down payment is gonna really kind of determine what their equity is gonna be. And in our marketplace, we're growing at what, 5,
So
10?
to refinance, they're gonna have to put more down payment, you're saying?
No,
Oh, I thought that's what.
because we're gonna be using that future appraised value as well.
Okay.
So it just depends on their loan program and their purchase price. I mean, if they're getting a good deal on it and they're gonna have that instant equity as well, or a portion of instant equity, then that refinance isn't gonna be.
So the down payment is based on the future value, not the current value when they close escrow, right?
The down payment is on the purchase price plus the total finance renovations times whatever percent they're putting down.
Okay, yeah.
Not
So-
on, it's not on the, it's not on the after improved value if the value comes in higher. It's the lower of the two.
Okay, but it's not on the as-is value either.
Contract price.
No,
Not
plus
price.
finance renovation. Uh-huh.
Got it.
And that question may be for you. If a house is so trash and the seller wants to just do cash only, and we come to our conclusion based on our research that your house is not even worth that because it's that trash, can our buyer purchase the home for what we say? Hey, they say 350, but it's really only worth 250 because it's so much work that needs to be done. And then that's my negotiation with this. If I'm gonna represent the buyer,
Yeah.
that's my negotiation with the seller, right?
So-
And then I can turn around and talk to my buyer and say, hey, look, this could be a deal for you.
Right, so once you have the construction quote and then the appraised value, let's say there is that discrepancy, then that's when you would go back, Jeannie, if I'm right, and then you could negotiate.
Yeah, we don't ever want to, absolutely, that's correct. We don't ever want to end up in that situation, although we do, right? I lean on you all heavily to tell me pull comps. So, and remember, if it's very important, if you have plumbing issues, HVAC issues, roof issues, those are deferred maintenance items. Those are zero after improved value because we are presuming that people should have maintained those. Now I know that's not the case. Look at foreclosures. if somebody doesn't have money to pay their mortgage, they certainly don't have money to maintain their property, right?
Right.
That's why a lot of short sales and foreclosures end up using renovation financing. Because you do have a bad roof or leaky faucets or water in the basement or, whatever the case may be. But in regards to your another angle, if you had that $350,000 listing and they said cash only, and your customer came in and said, I'll give him $250 in cash, and the seller took it, your buyer could come back and finance the $100,000 to renovate it, but they couldn't get their $250 back until Nat was able to do a cash out.
Okay.
So I can't do cash outs combined with renovation loans. So they would have to do the 100,000 in renovation on a renovation loan. Nat would have to wait whatever time frame that is to go ahead and come back and cash out a portion, up to the highest loan to value of what she could give them back in their cash purchase. Okay.
Place to stick built and manufactured, certified attached home.
We do not do manufactured, it's only modulars.
Okay.
And no VA.
We do not do VA. No. VA has a very limited what you can actually do to a home. I believe those were really started for handicapped veterans to make homes handicap accessible. They're very limited, and you can't do any structural changes. So you can't knock down walls or add additions or perhaps add a garage. If you want to go something with the least amount of down payment, the FHA is 3.5. And then if your customer is a first-time home buyer, meaning they haven't owned in the past 3 years, they could do a 3% down conventional renovation loan.
Oh, really great questions, you guys.
Yeah.
Your wheels are all spinning.
No, we have buyers that are looking for the cheapest thing that they can get. And then on the seller side, I just wanted to make sure that if they were presented that I could say to them that, hey, once it's closed at whatever this list price is, it doesn't affect you getting your money. You're gonna get it closed.
Right. It's just gonna take a little bit longer for the escrow period
Okay.
because of the contractors and then the appraisal being after you have the contractor quotes.
Okay.
But it's not the work, it's just the quotes.
Just a quote.
Right.
Yeah.
Okay.
So if they hustle and they move,
Yeah.
you wanna build it into your contract, but think as a listing agent,
Mhm.
if you have this idea, when you're trying to get a listing and they're talking to 2 other agents, do you think anyone else is gonna present this to them? They know what they have, and normally you go in and say, oh, we're looking for cash, we got an investor. Well, you're the person that goes, oh, I have a loan for this house, right?
Mhm.
So, I mean, it could definitely, one a year,
Because then investors I know, they're gonna try to get the cheapest anyway.
Right.
It's 350, I'm gonna give you 2,
that's
you
right.
know, because they know you're in a situation.
Well, we have, between my processor, Nat, and myself, and my husband, we will hound those contractors to get those numbers. I mean, we will put them on, we need a deadline. We're under contract to buy a house, and if we can't get those quotes, we can't order an appraisal for our customer. So there are been times where I've had to say we're going to have to switch contractors. And then I do have a company, they're actually out of Philadelphia, but if you have a property that is in disrepair and you can shoot me some really good photos, I could do a feasibility analysis of what they think it's going to cost. They're pretty good with pricing, but remember, it's just based on pictures. It's not going to be based on, if it needs a new kitchen, new bathrooms, and a roof, something like that. give you an idea what it would cost, and then we could put it up against after improved comps to see if it's a feasible project. And I do have that, they offer that service to me for free.
Okay.
I have one more question. It might be a little off the wall, but are you able to spot if a contractor is like overpricing a job based on your knowledge?
Good point.
Because if I were to do one of these, I don't know how much these things cost. I'm just getting quotes. And,
And the appraiser's gonna tell you what
yeah,
that,
I don't know
what that
what's,
value, it, you know, that pool isn't gonna translate as 300,000 in value,
right.
right?
Well, I mean, like, let's just say
Initially.
I'm redoing the kitchen and they quote me 200,000 and really it should only be 100 or something like that, you know, are you able to spot like a contractor that like is aggressive with their pricing because they're just trying to make a buck?
I spend a lot of time in my kitchen, so kitchens are my thing. I've spent a lot of time in the restaurant industry. I can tell you what kitchen costs should be. And you can look them up per area. Like what we pay here in this state might not be what you pay in your state. But two safeguards from that. If you are doing so HUD, excuse me, HUD, I didn't talk about this too much, but HUD made some changes, which I don't think they were the best changes on November 1st. Okay. It used to be that you could do a streamlined renovation loan. So think a smaller project for up to $35,000 without getting a HUD consultant involved. A HUD consultant is certified by HUD. They're typically either past contractors or past home inspectors. So if you have an FHA loan and FHA 203K and you're like, it needs work, but we don't know the cost and we don't know a contractor and we need some help here, we could hire a HUD consultant to come out to the property and do a 36 category repair report that breaks it down into appliances, cabinetry, bathrooms, you name it, and tell us what a reasonable cost would be for the job based in that area.
Okay.
Then your customer could go out and shop the contractor.
Okay.
So now that comes with a cost. So at $100,000, they'd probably charge you $1,000, but the payment is required up front, but some instance, we can credit it after closing or finance it back in the loan. There are different ways to do that, but that's one safeguard. The other safeguard is anytime you have a conventional loan with $50,000 more, 50,000 or more in work, I have to order a third party plan review. I usually use a company called Granite Loan Management. They're out west, I think in Colorado, but they do the same thing. They go through the quote and tell us if it's a fair quote based on labor materials in that area. If I see something come across my desk that has $100,000, I have had, I'll never forget, I had this one couple and the renovations were so much. After improved value wasn't a problem. But I said to them, these are really, really expensive. And they were like, nope, we've seen the work this contractor does. We know that it's high and we want to proceed. So between those three sources, I would hope, we have safeguarded against that.
Okay. That's cool.
Jenny, I have one last question. Is it on the buyer to select the contractor, and do you require 3 bids for a specific line of work? Like say, if it's renovate the kitchen. I would normally, if I was working with a seller who was trying to renovate prior to selling, I would get 3 estimates for all the work. So is that on the buyer to select the contractor, or do we submit those estimates to you, and is it you that will select the contractor based on the results of the estimate?
First part of your question is your borrower chooses their contractor. I cannot recommend contractors. It's against our, it's a conflict of interest, of course. So if your buyer comes to me and says, Suzanne Snow, we want to work with her company, I'll validate Suzanne. As far as I know, people want to get estimates, but if you're under contract and we have 45 days to close, we don't have time to get 3 estimates. Okay. If we're doing a major project, I would say identify your contractor pretty quickly. But I can tell you from just doing this, and Nat will learn this as well, getting 1 contractor quote or 2 is hard enough. We start getting 3 and the customer gets all confused, but 3 good contractors should come in around the same price for all 3. I would get a recommendation or a referral from a family friend, a personal friend, your broker, a fellow agent, and I would go with them and look at their work before you decide to go with them. But somebody that is decent and honest and somebody has personally worked with before.
And if you're having cousin Jimmy do it,
It's not gonna work.
you know what his bills are.
Yeah.
You know if he's gonna bump another job in front of yours. So sometimes it's good to use family and sometimes not.
Well, and if cousin Jimmy says he's going to do a job for 500 that should be 5,000, I'm not going to approve it. Yeah.
Yeah.
Okay.
Yeah, because everybody's going to lose in that scenario.
All right, if nobody has any other questions, I thought this was an excellent class. Thank you,
It was
Jeannie.
great, Jeannie. Thank
So
you.
much.
Yeah, and you all have been a great group. I love when people engage and ask a lot of questions, so I appreciate that. And Nat and I hope to help you with a lot of this type of financing in 2025. So to get everything started, you just go to Nat, and Nat will come to me if we need a conference call or any questions handled. And I know I'm doing a few more classes for you, so if you can't make this one, maybe you could join another one. And I appreciate the opportunity.
Thanks, Jeannie.
Thank you so much.
All right.
Okay, thank